CNBC-TV18, embarking on a quarter century of excellence.
Welcome to It's the Economy. The Commerce Ministry has recently amended the SEZ regulations to permit demarcation of a portion of the area within an SEZ unit as a non-processing or a non-SEZ area. The regulations specifically address this easing of rules for the IT and the ITES sectors, infotech and infotech-enabled services. So, how will IT companies benefit? How will the economy benefit? And indeed, why these change of regulations? For all this, I'm joined by Ashish Aggarwal, the VP and Head of Public Policy at Nasscom, and Gaurav, Karnik, Partner and Real Estate Leader at EY. Gentlemen, thank you very much for your time. Well, let me start with you, Ashish. Where was the need to, change these rules in this fashion?
So if you look at in this series of reforms, so now it's a good time to look at, how can the developer community and as well as the ITS industry get a little more flexibility in terms of how they utilize that entire space. And I think the overall intent is to say that there is this infrastructure and how we can maximize its utilization. So what this particular notification is trying to do is to say that, look, if you want to be in the non-processing zone, then you can be, and that can be done through this floor-wise demarcation. And so, in a way, it's a good step. What it allows people to think about is to say that, look, if we don't want to, let's say, if we feel that the compliances on the SEZ is something that we don't want to necessarily continue to have, then we can think of being into a non-processing zone. And ultimately, I think it gives the developer the flexibility to organize his setup.
Okay.
But I think there are a lot more issues which are related to this that I'm sure we can discuss.
Sure. Gaurav, first thoughts from you. Who were the people who were asking for this? Was it GCCs? Was it IT companies? Was it real estate? Which kind of industries benefit?
So basically, the whole issue was that developers who had built this SEZ, world-class infrastructure. Since COVID-19, one thing, the work from home whole thing, and also GCCs who wanted to come to India, like Ashish just mentioned. The tax benefits to the SEZ have been phased out. Okay. So what was coming for the new players was that you had world-class infrastructure, but along with that you had a lot of compliances. So there was a demand from units that who had to the developers that we are happy to come into the SEZ because you have great infrastructure, but the whole compliance makes us hire these compliance teams, which adds the cost. So that resulted in a lot of vacancies in the SEZs. There's nearly 170 million square feet of SEZs in the top 6 cities, out of which nearly 30 million is actually vacant right now. So there was a long-standing demand of the developers really that we should be allowed to arrange our SEZ in a way that we can use up the space, because there's great infrastructure which is just lying vacant, and it doesn't make sense for it to remain that way. Okay. And from a government perspective, you look at it by allowing the developers really to lease out this space or have it denotified. It gives them excess revenues because, one, you get rental GST, you get employment because new GCs will come in and set up shop here, will employ more people, and therefore they will result in more income tax as well. So from a government perspective also, it made sense to allow this flexibility. Okay. Because it is revenue positive.
Got it. Ashish, who benefits? Is it developer community or is it more ITES or more GCCs? Which is the largest community in these SEZs?
So in the SEZ, you'll find the IT services and GCCs both. So it's not, they are very well there. And overall, 60% of the industry is in a way in SEZ. So that's a good way to look at this. Okay. So I think this is intended to benefit both the developers and the units. But I think the point is that, the only thing which is doing is that it is giving you that option that if you have transitioned out of the tax holiday and then you are still looking at these compliances, so this is the next step to say that, okay, you can actually go to these non-processing zones. And similarly, if you look at from a developer point of view, if there are certain even new areas in SEZ where you have not constructed the building, where you just have land and you feel that you just paid the stamp duty and now you no longer want it to be to use that SEZ format, then instead of going for the complex denotification process, you could just use this. But I think one of the things which we will need to see in order from an overall reform perspective is that there are other elements like allowing INR billing. So, if once that also comes in, then I think combined with this, I think it starts giving a whole set of options to the units.
But has it not allowed? INR billing is not allowed. I thought that if in a particular building, an IT company uses, say, top 2 floors for dollar billing, and the others are denotified, they would be for rupee billing, wouldn't it? It doesn't go without saying.
Yeah, no, you're right. All I'm saying is that you don't have to necessarily go for demarcation only to take the benefit of INR billing, right? Okay. So I think INR billing is a request which is there for even when you are into the export processing zone. Okay. So I think, right. So when you see that as a reform, which again we expect, and then you also see this option of demarcation, then I think it creates a full picture in terms of ease of doing this.
Oh, yes. I'm an RBI reporter for a better part. And yes, that's very much something Reserve Bank is pushing, rupee billing. But Ashish, just to complete the point, how much do Indian IT companies benefit? Like, for instance, would it mean a lot of gain for a TCS or a Infosys or a Wipro? Are they predominantly in SEZs? And does this add to their margins immediately?
So see, a lot of the large enterprises are big time into the special economic zones, and some of them are also developers, and they have their own, buildings and units. So from that point of view, if they are at the end of the cycle of tax benefits, then it makes sense for them to review and say that, it makes sense for them to, whether it makes sense for them to move into a non-processing zone. But I think there are a couple of things that we are still looking as a clarification. For example, you need to repay the tax benefits that you have availed. Oh. And yeah, so that calculation, that maths has to be done. And also it is not that you have to repay the tax in terms of just the amount of tax benefit that you have utilized, and some bit of, is there any bit of concession in that? You actually have to repay the entire tax that you have taken as a benefit. So from that point of view, I think that is still a working that industry is doing to figure out whether it really makes sense for them to do this.
No, but if they are already completed their phase of, within the SEZ location, their export commitment, do they still have to pay back? After all, during that period, they could avail of the tax benefit. If they denotify now, after the period has ended, even then they have to pay back taxes?
Hey, step in, Latha, the way the circular is that basically it does with the developer, the SEZ. Now, when the SEZ was built up, they took the tax benefits for both the processing and the non-processing area. Okay. So now when you make a processing area into a non-processing area, whatever fraction it is basically a proportionate amount of tax benefits that you take to the extent of the non-processing area that you have to pay back. All right. The issue comes is how do you calculate the value? Okay. Because it's not given that you get depreciation on the building value. Okay. So it has to be certified by a chartered engineer. So there will be some work around that how is the valuation of the building to be done, so as to get the correct amount of taxes which they have to be paid back. Okay. And also with regard to common infrastructure will now be used by both processing and non-processing. You will have to pay back the tax benefits you used when you build this up. So that's how it is. That's how the circular, the notification has come out.
Got that. So immediately, Ashish, we cannot calculate, there isn't any immediate margin benefits flowing to IT companies?
So it is not something that is immediately apparent to say that, units are immediately taking a decision that they are now going to take this particular step. And given the fact that developers, the IT units who have the entire, who are also developer, then for them, it won't be a case of trying to, do a partial demarcation. Okay. Probably they want to look at the full thing, then those costs become more relevant, right?
Okay. Okay. Yeah. Well, to come to you, Gaurav, there are no immediate beneficiaries then? It's all waiting for the rules to come out?
So I think the rules are, the notification has come out and, people are already started to work back to the development commissioners and they will be putting in applications for denotification. A number of the listed REITs, they have a large amount of SEZ space in which currently they have vacancies. So let's say in the next 2-3 months, they do get the denotification. I'm sure they're going to attract, more tenants. So I think there is going to be an upside in the next 6 months for most of these listed REITs for sure, because at least the vacancies will come down. You'll have more leasing income, which should improve the yields on the REIT.
On the REITs. So the REIT guys are the first beneficiaries, not
But-
any of the...
Yeah.
Sorry, go ahead.
And the larger developers, like, we have the large listed companies who also have SEZs who are not necessarily REITed,
Yeah.
but they are listed on the, public stock exchange.
Yeah.
So they will also have the same benefits coming in.
Yeah, we did speak to both MSC REIT and DLF earlier. So those two are clear beneficiaries, but not any directly the IT companies, Gaurav?
So IT companies, like Ashish said, that has to be worked out how that works. That are they the new ones will come in? Mostly are the new units who are going to take benefit of this non-processing area, or is the existing ones? Because then when the existing ones move out or get re-notified, they have to return back also the tax benefits.
Okay. So
that working has to be done to see how that impacts the bottom line.
Okay. No, I sense that because the stocks didn't immediately move after the deregulation. So I just wanted that clarification for the larger body of investors who are watching you. Gaurav, what would be the, Ashish, what would be the broader advantages? More GCCs would be attracted because this is counting as ease of business in India?
Oh, definitely. So if you just look at it from the point of GCC itself, roughly 40% of the global market is still to be established in India. So there's a huge appetite. And we have seen over the last year that growth really, also gain more momentum. So from the overall industry growth perspective, I think it's a world-class infrastructure and these are in good places, good locations. So I think people who don't want to get into a lot of SEZ compliance, and obviously the tax holidays are gone. So net on that front, it's quite a good move.
Okay, and just a final question to you, unrelated to the SEZ regulations, Ashish. What is the mood among GCCs? Since we are seeing fears of a slowdown in US and already some softness in Europe, are GCCs, not expanding that quickly or not setting up new units? Is there any kind of hesitation or slowdown in the September to March period?
So I don't think we have an outlook for September to March period specifically, at least I don't have that. But I think overall there is already a pipeline in terms of the work from a GCC perspective. And given the fact that it's a fairly related party kind of a construct, I think, and from an India point of view, I think there are no immediate concerns. So I think as long as it is business as usual, we are seeing that growth.
No, that's true. I agree for existing ones. What I mean is that people who are wanting to set up a GCC, is that pipeline reducing at all because of this feared slowdown?
So at least we are not seeing that in any manner in the GCCs.
Okay, well, I just thought I should use if Nasscom is with me for the larger question as well. Thank you very much, Ashish and Gaurav, for improving our understanding of this ease of doing business by the, kind of a deregulation in the SEZ regulations. They can demarcate a part of their land as non-SEZ purposes, should be beneficial for the REITs and the developer community immediately and in the long run for IT and GCCs as well. Thank you very much for watching this special edition of It's the Economy. After a break, it will be time for Chartbusters.
CNBC-TV18